In today's video, traders, we're going to be talking about trading using multiple time frames, using the higher time frames all the way down to the lower time frames to help guide and kind of understand what the overall market is doing so that you can execute trades better on different time frames. Let's go ahead and get into the video right now. Welcome back, traders, to another one of my videos. My name is Nick, also known as Trader Nick. I make all sorts of trading educational content here on YouTube for free. In fact, this is actually episode number 3, or episode kind of lesson number 3 in our free price action course that we are doing here on YouTube. Do me a big favor, if these are helpful to you and you want to see more of this sort of content off of my channel, please give this video a thumbs up down below. It really does kind of go a long way to show that you are supporting the content that I'm putting out on the channel. Also, comment down below something else you'd like to see, and I will do my best to kind of provide that to you guys here on the YouTube channel. Without further ado, let's get into today's concept, which is going to be trading using multiple time frames and using the higher time frames to help guide execution in the lower time frames and vice versa. Understanding the overall market structure is super important, and if you're trying to trade the 15-minute chart without understanding what may be going on in the 1-hour chart, you might actually be doing or missing out on some of the content or some of the clues that the market is telling you. Again, price action is all about understanding the story of price and understanding what market participants are kind of thinking, what they're going through, and where price may be headed next based off of the story that we see unfolding on the charts. So with that understanding, you want to understand the overall context, which would mean you need to understand what's going on in the higher time frames to help you guide your trading on the lower time frames. So what we're going to do here is I'm going to walk through kind of some examples of using multiple time frames in your trading to help you understand a little bit more about the price action story that is being told. So what we're looking at here, we're looking at GBP USD. Now what I've done is I've pulled up a daily time frame. Now this is key, and this is on purpose, right? We're looking at the daily time frame. Now what we're going to do here, I'm going to draw this out before we get into kind of the technicals. We want to do something like this, right? So this is going to be our daily all the way down to something like, let's say that we're using the 1 hour, okay? So generally, my rule of thumb is that if I'm looking at the 1 hour, right? Let's say that I want to trade the 1 hour chart. If I want to trade the 1 hour chart, generally I'm going to look 2 time frames higher than that to get a clue or get an understanding of what the overall market is doing, which would mean that I also take a look at the daily chart and the 4-hour chart. Right, so let's say that I want to trade GBP USD. I want to trade it on the 1-hour chart. Again, I want to take a look at that 4-hour chart, and I also want to take a look at that daily chart. This is going to give me a clue of relevant context, right? Of relevant time frames that are going on. If I'm trading the 1-hour time frame, do I need to look at a monthly chart? Maybe not. Would it be helpful? Maybe. But in my personal case, my personal opinion of this is that if I'm looking at the 1-hour chart, I kind of want to step up 2 levels from there to get a context. Again, forgive my terrible artistic ability, but you can see I want to step up 2 levels here to kind of see what's going on in the daily as well as the 4-hour chart. So let's go ahead and get into an example of that. Again, my goal here is if I'm looking at the 1-hour chart, I'm going to look at the 4-hour and the daily. Let's say that I was looking at the 15-minute chart, right? Well, in that case, what would I want to use? I'd want to use the 30-minute chart and the 1-hour chart, right? So with that said, we're looking 2 time frames ahead or up, right? We're doing from top to bottom. So just in summary here, right? Top is up here. We're going to be doing a top down, right? So we're going to be looking from the higher time frames first, and we're going to be working our way down to that lower time frame. Why would we want to do this? Remember, it's all about story with price action. We want to understand the overall context. Okay, enough of that. Now we get that point. If you need to back up to see that again, please do so. So overall, we're taking a look at GBP USD on the daily chart first. Remember, we want to be intraday trading. Let's say that we want to trade, for example, the 1-hour chart. If we want to look at the 4-hour chart, we want to start with the daily. We're going to start from top down. And let's get a little bit of a clue of what's going on. By doing some simple analysis, right, taking a look at this trend line, for example, what you can see is that on the daily time frame, price is very, very bearish here on GBP USD. In fact, if I get myself an indicator, we can also add a moving average. Let's add the 50. You can see very bearish price action here. And what I also want to point out is check this out. I want to draw some zones. Now, if you don't know what a zone is, purely it is something based on support and resistance. We will do probably a fully dedicated episode just to support and resistance, but I do have an old episode that you can take a look at. I keep saying episode, but it's really just a video. If you want to go see the old video that I've made on support and resistance, you can check that out here. But with that said, assuming you know kind of generally support and resistance, what you can see is that price responded to this level here. And what I'm going to do is I'm going to just pull up my sketch pad here, and what you can see is, take a look at this. Price is reacting bullishly over here to this level, right? We're finding buyer structure support. That's telling us that this particular zone historically was a level of buyers. And so when that price actually broke through, that was a big sign for sellers as sellers took over in this market. So as price started to sell off, you can see that this market that once was a kind of demand zone or buy zone actually broke through, and we saw continuation to the downside. So now we want to mark this area as a historically significant zone. And that's exactly what we're going to do here when we're doing our top-down approach. We're going to mark historical zones that were very significant. So in this case, clearly this level was a major zone. And so now what I'm going to also do is, just for the sake of kind of cleanliness, what I'm going to do is I'm going to actually write in here that this is a daily resistance. Okay. And let's make that text not so big. Let's make that like, let's make it 20. Oh, not 200. Let's make it 20. So let's make that 20 and we'll just put that in there. I don't know how this is going to look, so let's kind of take it down a notch. So now that we've done our resistance level kind of structure here on the daily chart, let's also make sure that we add our daily support level, right? Clearly that this bottom low, this is kind of our recent daily low. So we'll put in here, we'll make this light green, just for simplicity. Again, and what are we doing here? We're looking at the different zones of structure, of significant, historical levels that we want to understand, right? So this was a major level of support on the daily chart. So what we're going to do is we're going to step it down pretty soon. Let me write in really quick. This is our daily support. Right? So we've written in our daily support, and this is giving us some context, guys. That's what's really important here. We'll step it down to the 4-hour chart. We'll bring it back into reality here. And what you can see now is that, of course, you can't see everything that we just charted up because we dropped it down on a time frame, but you can see something very, very important. Okay. Daily resistance here now is something that we can see on our 4-hour chart, even though that might not have been something that we could easily see back here. You can't really see it very clearly on the 4-hour chart, right? You had to zoom all the way back here. Well, now by doing our top-down analysis, we've taken a look at the daily structure first, and then we have, where is our daily? There it is, our daily support, right? So we've marked out our daily and support and resistance. This is going to give us some context as to where historically on the higher time frames, buyers or sellers might be hanging out. And so now what we can do is we can repeat the process. Remember, the end goal is to get down to the 1-hour chart. We'll take a look at this. Now we actually see some bullishness here on GBP USD looking at the 4-hour chart. Look at this, guys. We have nice bullish structure here on the 4-hour chart. Right? But remember, the overall structure of the daily was down, right? So if you're a trend trader, this can be confusing. This can be a little bit confusing, right? Because on the 4-hour chart, what do we have? We have an uptrend. Right? On the daily chart, we have a downtrend. This is why, guys, it's very, very important to understand the context of the market that you're trading. So when we're looking at GBP USD, sure, on the 4-hour chart, it might be bullish, but on the daily chart, it was clearly bearish. Very, very strong downtrend long term. So we want to understand the overall context so that when we do end up taking a position, whether we're trading pullbacks or breakouts or, whatever you're trading, you want to understand that context so that you have a better idea of what overall the market direction kind of is and how you can trade accordingly. Okay, so we've identified that this 4-hour chart here looks pretty bullish. In fact, this 50-period moving average holding nicely as a bullish support level. So now that we have that in mind, though, let's talk about our daily support and resistance. If we were trading the 4-hour chart, well, maybe we could say that, you know, if price gets up into here, we want to remember that this is probably a zone to look to get out of a trade, because we know that on the daily chart, there's a heavy resistance in this area. So let's say, for example, that we were long on this pullback to the moving average. Let's say that we did have a target. We don't want to just, you know, target the moon here, because we know that when price gets up into that daily resistance, that there's a pretty good chance, now not a guarantee, but a pretty good chance that if price gets up into that resistance zone, that we're going to see bearish rejection. So we want to understand, this is why it's so key, guys. People are trying to buy sometimes when it's in a resistance point on the daily chart, and they have no idea because they haven't done a top-down approach. In this video, of course, the goal is to show you step-by-step top-down approach to looking at the market and understanding the different zones and different contexts of the different time frames that we're looking at. So again, let's repeat the process. Let's talk about some recent structure zones, right? If we repeat the process that we did recently, right, on the daily chart, we can see that this area, what we'll do is we'll mark this as kind of our support zone, right? Here is our recent support zone. And we'll go ahead and mark this as well. Right, here is our 4-hour support, right? This is a 4-hour support zone. Clearly, buyers in historic levels have been holding this structure here. In fact, you could probably even extend it down up to this level as well. Yeah, and we're going to go ahead and do that, right? Because you can see that this kind of structure here, this low, held very nicely as bullish support. We did get a fake out to the low side, but ultimately held that moving average there very nicely. This is a multi kind of bottom level structure here that we have seen on the 4-hour chart forming. So we can mark that on our charts so that when, again, we lower the time frame once more, we have context, right? So the next thing we're going to do is we're going to also kind of highlight some recent structure resistance, which is going to be clearly this recent high. We'll make this light pink as per usual. And you can see, and if you want to change the colors up, of course, that's up to you. In fact, some people will change the different time frame colors. So for example, they may make the daily support green. They may make the daily resistance pink. They may make the 4-hour support blue, right? They might just change it up so that they can visually see that. But I like to just add the text in there, but really up to you. So again, 4-hour support has been located, and we'll also kind of highlight our 4-hour resistance. So what is this all doing? What this is doing, guys, is it's telling us when we lower the time frame, we get an easy kind of look at what's going on with the market. So now we have, take a look at this. Now we are on the 1-hour chart. And this is key, guys, because look, it matched up. All of that analysis led to this point now where we see a choppy market on the 1-hour context. But remember, the overall context in the 4-hour chart was a bullish trend. And in the overall context of a daily chart, it was a bearish trend. So sometimes people will look to line up everything, right? For example, if they're trading the 1-hour chart and the daily has a strong downtrend and the 4-hour chart has a strong downtrend, then they're going to look for 1-hour downtrend structure to trade to the downtrend, right? That's just one example of using multiple time frames. But in this context, I'm showing you really just showing you how to kind of set that up for yourself so that you can look at that and get a context of what's going on in the market. So now that we've done that, now that we have our 4-hour resistances and our daily resistances and our 4-hour support and daily support, this gives us kind of some context to what we're doing. So for example, if we're trading let's say that we are long here, right? If price comes into a 4-hour resistance, well, then you know that there's probably some sellers hanging out in this general area. And if price continues up, then definitely, you know, there's an even stronger chance that daily resistance, a high structural level, is going to play out on the lower time frames as well. And this is the key point, guys. If we're taking a look at this market, and let's say that we are long, right? If the market starts heading in our direction, we want to make sure that we are respecting the higher time frame support and resistance zones, right? So if price does come up into this 4-hour resistance, maybe we close off partial of our position. And if price continues up, right, then at this point we could get out of the position completely or again, take partial profits. Something to consider, guys, is to use multiple timeframes to your advantage. You can look at multiple timeframes to get a better understanding of the overall context of the market environment that you are in, right? Understanding the trend on multiple timeframes can be helpful in identifying some higher probability trades. For example, if you were trading this 4-hour chart, right, and you knew that the daily trend was down, but the 4-hour chart was up, you're not really doing the full kind of justice of understanding the overall market story. So although the 4-hour trend is up, we still have to remember that the daily chart was down, right? This gives us insight onto where the overall market direction has been historically and where it might continue to, play out through. So we want to be open to that and we want to understand what's going on. This gives us a better understanding. So as we go through trading, if you're a trend trader, you can use this to better align yourself with the trend on multiple time frames to give yourself a better probability. Guys, thanks so much for watching this video. We'll catch you on the next one.